Well, we've just had the latest GDP figures in. The economy growing at 1.8% for the first quarter of the year. That's 1.1% for the year. Joining me live from Sydney is Business Editor Ross Greenwood. Ross, such a massive figure in normal times. We know, of course, about bouncing back, though. And the economy now is bigger than pre-COVID. This officially tips that over into that marker?
Yeah, it does. And indeed, the forecast today had come out significantly weaker than what the actual numbers have come out. So just to give you a little hint, in that December quarter, and these are March quarter numbers to the end of March, effectively last quarter, the economy grew 3.1%. This quarter, it's grown by 1.8%, but the forecast was just 1.5%. And then, for the year on year, at the end of December, it was backwards over the course of the year by 1.1%. Now it's up by 1.1% from March to March. The forecast had been to be up by 0.6%. So you can see a pretty big reaction here, no doubt on money markets, the Australian dollar, and also no doubt on interest rates and the question about whether Australia's economy really is growing faster. So these numbers are faster than what the government is forecasting. They're faster than what the Reserve Bank is forecasting. And it also shows just a little hint here that Australians are getting their confidence back quite significantly because the household savings ratio is well down. So there's two things. Australians are spending more money, Tom, and then the second part about it is our goods and services being sold overseas, in particular iron ore and liquefied natural gas. There's more of it going overseas, and more of it's going overseas at higher prices, and that's good for the economy.
Yeah, that's the good news. The headwinds coming, of course. We've spoken a lot about international borders, the delay in when they'll reopen, but now we're really realising that the shorter-term lockdowns during winter could really have a big impact on future figures.
Yeah, that's true. And one of the important parts about this is if the lockdowns in Victoria, as expected, go for the 7 days, it's suggested that could cost the economy around $2 billion. Now, in the whole scheme of things, it's not big because you tend to find that when economies reopen, they get that back plus more. And so the issue here is about what it does for confidence, not just confidence for Victorians, but for people in other parts of Australia as well. But just to give you some hint as well, while the pandemic really hit its highest and the government was rolling out JobKeeper, of course, the savings ratio, which in the past has even gone to negative, went to 20%. So in other words, 20% of everything people earned was being saved or being used to pay down debts. Well, that's now gone in this last period of time from 12.2 to 11.6%. So what this says is Australians are more confident, they're more confident in their jobs, and as a result, they're prepared to spend more of their income and put less aside for potentially tougher times in the future. And again, that says everything about the rebound in Australia's economy.
And so much more there to spend if they want to unlock it. So, yeah, that's a big sign of the future. Ross, thank you.